Welcome back, ladies and gentlemen. It's Benedict here again from the Gingan Company Associates. And I rather want us to continue with the accounting for revenues and expenses, the chapter 2. And now we are on cash book. And then before we continue, let me take this opportunity to thank those who have subscribed. And if you are on this channel for the first time, please take a second or two just to click on that subscription button. Also subscribe. Thanks a lot for your support. And let's continue with gaining more knowledge. So we are on cash book, and then we have different types of cash book. But before that, let's try to explain what we mean by cash book. And then we are saying cash book by definition is an accounting book that is meant for recording all cash transactions. It's divided into two parts: debit side on the left hand side for receipts and for receipts of cash, and credit side on the right hand side for payments. So we are saying a cash book is an accounting book that is meant for recording all cash transactions, and then it is divided into two parts: debit side for cash receipts and credit side for payments or other cash payments. And then we also have different types of cash book. We have single column cash book, double column cash book, and triple column cash book. So what do we mean by a single column cash book? So when you talk about a single column cash book, we mean when receipts and payments are for cash transactions, we refer to the cash book as a single column cash book. That is, no bank transactions are involved. So the transactions involved in a single column cash book is just cash transactions, no bank transactions involved. And then we also have, down here we have a single column cash book. So we have the debit side and the credit side, debit side and credit side. And then we also have the date column. We have a particulars column is where we put the details of the cash transaction. And then we have the ledger folio. The ledger folio here is just to enter the page of the ledger. Like for example, maybe we are getting a payment from a customer, and from from the ledger of that customer, or rather from the ledger of the sales, we'll record we've received the cash from customer, and then we'll also come and record cash received in this cash book. So on that page that we recorded the cash received from customer on that ledger folio, or rather on that ledger, is the page that will come and record in cash book. So the ledger folio is just recording the folio for the ledger of a particular account that is involved. So we also have here cash office. So cash office is just for cash. This is where we put our cash for payments and for what we've received. And then they're on both the debit side and credit side. So moving forward, we also have two column cash book, and we are saying a two column cash book when receipts and payments are for both cash and bank transactions, then we must maintain and record both cash and bank receipts and payments. It then calls for cash book with two columns for cash receipts and payment, and for bank receipts and payment, we refer to the cash book as double column cash book, i.e., that is both cash and bank transactions are involved. So what we mean by two column cash book, simply put, when we have bank transactions and cash transactions, both for receipts and payment, we must have a two column cash book. So one column would be for cash and the other column would be for bank receipts and bank payment. So down here is a sample of a two column cash book. We still have a date column. We have particulars area. We have the ledger folio. And then we have the cash office column and the bank column. So both appear in credit side and on the debit side. So that is a two column cash book. And then we also have a three column cash book. And now with the three column cash book, we are saying in addition to receipts and payment for both cash and bank transactions, we also have discount allowed and discount received for sales and purchases respectively. So another column is added to the cash book for discount allowed and discount received. So discount allowed is an expense. Remember, we are dealing with the cash discount. So when the customer is coming to pay, you tell the customer, when you're paying in cash, I will give you a discount, maybe 10%. So when the customer was supposed to pay $100 and is given a discount of 10%, it means that you will have forgone amount that you ought to have received of $10, and now it becomes an expense because now you are foregoing amount that you're supposed to have received. So the discount allowed will be an expense, so it will be debited on the cash book. And then discount received will be again and recorded on the credit side. So discount received is a case where now you're supposed to pay the supplier. So the supplier is telling you when you pay in cash, you'll pay less by a certain amount. So maybe if you're supposed to pay $100, so he's telling you he'll give you 10% when you pay in cash. So instead of paying $100, you'll be paying $90. So the $10 will be a discount and it will be a gain for your business. So we say gains and incomes are always credited. So the discount received will be credited on your cash book. Discount received will be credited on your cash book. Down here we have a sample of three column cash book. So here we have we still have the date column. We have particulars, then we have the ledger folio. So we've now added a column for discount, and then we have the cash office column and bank column, and they both appear on credit side and the debit side. So this is what we call three column cash book. It has three columns for discount, cash, and bank. So we need to do an illustration of how to make entries in three column cash book, and I want us to make entries on the next video. So for this video, I'll just do a recap on what we mean by cash book and the types of cash book. So we have here, we are saying that the cash book is meant for recording all the cash transactions. and it is divided in two parts: debit side and credit side. So debit side is for receipts, and credit side is for payments. And then we're also saying that we have three types of cash book. We have single column. So with a single column, only cash transactions are involved, no any other bank transaction, and no anything to do with the cash book or other cash discount. So we only have cash transactions. And then we are also again saying we also have two column cash book, and with the two column cash book now we have cash transactions and bank transactions. So in our cash book we'll have a cash column and a bank column for both debit and credit side. And then lastly we are saying that we also have a three column cash book, and with the three column cash book now we keep another column for we are creating another column for a discount received or discount allowed. And discount allowed will be an expense, so it will be debited on our cash book, and discount received will be an income, and so it will be credited on the credit side or cash book. So that's all about the definition of a cash book and the different types of cash book. So thanks for watching, and let's meet again on the next video where we'll be doing the entries of a cash book.